Good morning. This is the Gold Fix Market Rundown. I'm Vince Lancy. It's 8:02 a.m. and there's the homepage of Gold Fix. We're going to talk about two stories. Top right-hand corner, gold supplier collapse triggers scandal in Shenzhen Shui market. I think I got that pronunciation right. And lower left-hand side, our exclusive, that scandal explains the LBMA's failure to deliver. Plus, we have to touch on Fed Day. So let's start with that. There's our topics. Here's the markets. 10-year yields are down 2. The dollar is 97.04, up almost 3. The S&P 500 is 66.49, up 44. The VIX is 14.85, down 86. Gold is 36.67, up 8. Volatile night. Opened stronger on a dead cat bounce, got weaker as we headed into Europe, and now is up probably in sympathy with the stock market. I think people are trying to make up their minds still. Silver, as hoped and expected, is rallying with stocks now, up 17 cents at 41.85. Copper 453, down a penny. WTI 64.48, up 39. Natural gas 307, up 2 bid. Bitcoin, a little bit of a bounce, but it's doing very well, 117,000, but still muted, I think. Ethereum down 15, little rotation there. Platinum, palladium mix down 9, up 21, and respectively. Gold, silver 87 and change. And grains mixed, wheat up, the other two down. Okay. We did a detailed Fed recap yesterday in the Gold Fix PM. We're just going to go over what we think going forward from here, and that's primarily for the chat people. A little bit of tactical balancing there, and well, let's get to the actual stories. So yesterday we posted a story that a gold supplier collapse triggered a scandal in Shenzhen Shui market. Now, scandal is their word. We're just parroting it, but the news story is valid. A gold dealer, a supplier, Wei Baoxin, precious metals, abruptly shut down, leaving hundreds of merchants with losses estimating above 10 million yuan. Now, that story is explained in detail. I'm only going to touch on it. It's unlocked, and you can read that, what happened there. I think once people figure this out, they're just figuring it out now. Once people figure this out, they're going to see what the implications are. China will standardize, centralize more. Anytime you liberalize a market, you have growing pains, or when a market's coming out, you have growing pains, like the LBMA, which brings us to the second part. This is exclusive and it's our own and it's correct. The collapse of Wei Baoxin's Shenzhen Shui gold market exposed more than one failed supplier. At the core are plate material dealers. Hat tip to Bao Xiaojun and Eric. Uh, Plate material dealers are intermediaries who add heavy leverage and deferred payments to physical gold trading. In essence, they were naked, short, and unable to deliver metal they were asked to. This turmoil marks growing pains for China's largest gold hub at the jewelry level, and is likely to bring tighter oversight. It also inadvertently betrays precisely why the LBMA failed to deliver gold in a timely fashion earlier this year. It's all the same thing. As a market gets bigger, it reveals the cracks in the infrastructure. And in that case, in London, they deferred delivery by 60 to 90 days. You remember the excuses. It's heavy. We're not really equipped for all this. Well, imagine if this plate metal dealer could do that. Oh, we'll get it to you in 60 days. It'll be okay. We have a full exclusive breakdown of that, including charts and how it works. And it's based almost entirely on my own career as a market maker who would butt heads. I was the Wei Baojin company. I mean, I didn't steal money from anyone, but I would go head to head with the bank dealers. Anyway, so they had resources that I did not, so we had to survive that. But anyway, the full analysis is in the premium post. The first one is gold supplier collapse triggers scandal in Shenzhen Shui market, and the second one is Shui's scandal explains the LBMA's failure to deliver. Related posts, founders trading as an art, Fed Day, Big 25 versus 50 rate cut question. The answer was 25. And Goldfix PM, Fed Day recap, an extended 13-minute audio recap for you, as well as charts of the market. And in case you missed it, yesterday's story, the news is coming out of Asia now. Hong Kong moves to eliminate dollar use in public square. I guess an alternative title would be uh, the dollars are going to be they're replacing dollars. That's what they're doing at the grassroots level. Anyway, coming soon, we have 5 stories over the next 3 days to put out. The first one is a breakdown, or our interpretation of a breakdown by DataTrek, called Gold Now versus 1979. I think it's very timely because, myself included, people were looking at the rally and saying, you know what, it's kind of rhyming with 1979. Maybe this is the blow off top without a blow off top. And uh, most of us, biased that we are, said, you know what, there's no blow off top here. It's probably not the top. But DataTrek puts a fine point on it, explaining the difference between then and now, both from a chart perspective, from a macro perspective, and from a crisis event perspective. So I think it's very good, and that'll be out tomorrow or the next day. A Bloomberg analyst notes that Asian central bank demand may be topping out, and his points are valid. I personally think he's early, but he's right to have that on the radar, because when you get to 20% or 25% or 30%, it's over. So you can't really bank on the accelerated buying anymore. The buying will continue, but it'll peter out. Deutsche Bank has a report out. We see that the legacy media is reporting it as gold to trade 4,026 and silver to trade 45 and 26. No. It's gold to average $4,000.26 with a high of approximately 4,300. Silver to average 45 and 26 with a high of approximately $48. That's the story. See, a high of $48 with an average of $45 implies a low in 26 of approximately $42 to $44. So everybody is raising their floor even as they're compressing their ceilings with their highs. No one's going above, you're not going above 4,000, but you're raising your floor. Or you're going above 4,000, as is Goldman's way, and saying this could happen. Be careful. Next story, India's silver imports are poised to accelerate. In 24, India had a massive intake of silver, and it was like 2 or 3 times what their average was. And in 25, it has been lackluster. Sorry to use that term, but it has been low. Still, I think higher than the rate of accumulation prior to 24, but lackluster. However, there's some analysts in the industry that are pointing towards it accelerating in the second half. And a large part of that is gold's too high, let's buy silver. So you might see another big offtake in Indian silver this year. The final one is this just came out this morning. Essentially, we were monitoring it, but China to loosen import restrictions on gold. It's a convoluted statement when you read the official statement, which we have, but it essentially means this. Generally speaking, as a centrally controlled economy, you can't buy gold until they give you an allocation at the state level. So you can buy gold now. You can buy gold now. And so they accumulate orders and then they go out and they buy it. They accumulate orders, they get permission, they go out and buy it. Well, they're seeking to, China is, I mean, they're going to do it, right? China is seeking to liberalize the import and export. So instead of waiting for an allocation from the government, I'm metaphorically speaking, the government's going to issue them permits that allows them to use it for over a period of time or over a period of 5 deliveries. It allows them to space out their buying, which, by the way, would be better for their consumers because the price, the demand wouldn't get bunched up and then go out, causing these spikes. So it would actually reduce volatility and probably reduce premiums in Chinese regional gold versus international gold. But the effect of that is you're letting the constant demand come out of the market. You're taking the Chinese premium and assuming that demand stays the same. Let's say you have a Chinese premium. Let's use silver. Chinese premium versus domestic versus let's say London or US premium. And a large part of the premium in China is because it's bottlenecked and released, bottlenecked and released, right? When you make it easier for people to import and export gold, what you do is you smooth it out. And so the premium will shrink. It should shrink, all things being equal, but the demand will filter out more efficiently. So the whole thing should converge at a higher price, at least a little bit based on this. That's the market structure talking. And what that really is, it's China projecting its pricing power globally. It's China taking more control of the global market. That's what's going on. That's the world. Uh, Data on deck Friday. I'm sorry, today's Thursday. 8:30 a.m. initial jobless claims. That happens every week. But I think people are really going to watch that now. If it comes in weak, you could have a nice like kick underneath. All right, so charts and final market check. Let me pull this up. These are just some notes that I wrote. All right, so this is for the chat people. This is a tactical comment. Right now, I am tactically bearish. My opinion doesn't really matter, but I'm just letting you know where I am. I'm tactically bearish, and I'm fundamentally and secularly more bullish than ever based on these stories that I'm looking at. So I'm not playing, right? I'm already long, uh, uh, responsibly long. I would consider getting short for a seasonal trade, but I'm not even comfortable with that because of all this fundamental news. Who wants to be bullish secularly and bearish short term and lose money? You just don't want to do that. So I need to see how things digest this China news. I think there's more news coming out in China about the potentiality for this. I want to see how this gold delivery that's being taken in China, it's like 56 tons now, where that's going. If it pops up in Hong Kong, then seasonality won't matter this year. If it doesn't pop up in Hong Kong for the repo concept that I alluded to that I discussed, then we're going to have a secular sell-off. CFTC info may be helpful this weekend. Miners on the dip might be best. Pray for a strong U.S. dollar so Americans speak through miners. So I'm thinking we're in sell season. There's going to be selling. The question is, will be sold into a strong market or a weak market? I'd like to see a stronger dollar if I'm a buyer of miners, and I think miners would have a better chance of selling off than gold if the China news is bullish. So that's the comment there. That's it. I'm not going to go through everything else. There's just so much going on right now. And that's what gold is. Gold has uh, always been money. And now the world's being forced to pay attention to it. There's lots of news on it. I'm Vince. Have a great day.